Welcome back to the Tuesday Target Audio Companion. I'm here with Penelope to walk through Yuri's letter this week. And Yuri did not pull punches.
He never does. The title alone tells you everything. When the casino sells lifeboats. That's the whole thesis in 5 words.
Okay, let's unpack that. Because on the surface, things look fantastic. 9 green days on the Nasdaq, the longest win streak in months, Goldman traders doing victory laps. What's the catch?
The catch is who actually did the buying. $43 billion of mechanical trend-following money and the largest weekly ETF short squeeze in a decade. That's not investors falling in love with stocks again. That's algorithms covering shorts because their models flipped.
So Yuri calls it a fire drill, where everyone runs back to their desks because the alarm stopped ringing.
Exactly. It looks like conviction, but it moves like compulsion. 2 very different things.
And then he goes after the earnings story, which has Wall Street high-fiving. 12% S&P earnings growth this quarter. Loudest headline in 5 years.
Right. And here's the line that should make every reader pause. Pull out 2 stocks, Nvidia and Micron, and more than half of that growth disappears. Half. The whole bull narrative is wearing a tuxedo, but underneath it's one concentrated semiconductor bet.
Which means if either of those 2 names stumbles on guidance.
The whole broad earnings strength story collapses overnight.
Okay, now, the part I really want you to explain. The casino metaphor. Yuri talks about banks selling lifeboats. What is that actually referring to?
This is the cleverest catch in the letter. Next week, JP Morgan, Goldman, Bank of America, Barclays, and Deutsche Bank launch a brand new credit default swap index. It lets investors short private credit managers directly. Apollo, Ares, Blackstone, names the same banks spent 3 years pitching as the safest yield on earth.
Wait, so the banks that sold private credit as the can't-miss trade?
Are now building the instrument to bet against it. And here's the kicker. The Fed has quietly started asking those same banks about their private credit exposure. Treasury is doing the same thing with insurers who hold roughly 35% of their U.S. investments in this stuff.
That's the casino selling lifeboats.
And handing you the blueprint of where the holes are. Yuri's question lands hard. Who's actually buying that insurance and why now?
Let's hit the rest fast. The Hormuz blockade.
Trump launched it at 10 a.m. New York time. That's a market signal, not a military one. The play seems to be squeezing China into pressuring Tehran before Iran's storage tanks fill up in about 13 days.
Main Street sentiment.
University of Michigan consumer sentiment just hit its lowest reading ever recorded. Worse than 2008, worse than COVID, worse than the 70s. Meanwhile, the S&P sits 2% from all-time highs. That gap rarely stays open for long.
Volatility.
The VIX collapsed back to 18 during the ceasefire bounce. Hedges that cost a fortune 2 weeks ago are pricing like nothing happened. That's exactly when smart money quietly restocks protection.
And the trade idea this week, Yuri is targeting crude oil futures.
Brent July futures are chopping violently between $79 and $94. Oil volatility is severely elevated relative to equities. Yuri's setup is a slightly bearish Iron Condor, collecting a juicy credit by selling the extreme tails on both sides while the geopolitical staring contest grinds sideways.
Tactics for this tape in 1 sentence.
Fade the edges, build longs on real pullbacks, add protection on rips while volatility is cheap. Trim anything that rallied purely on short covering fumes.
Final word.
Watch what the casino does, not what it says. The squeeze is loud, the earnings story is concentrated, and the people who built the system are quietly buying their own escape hatches. Read the letter. The full version has more layers than we covered here.
That's it for this week's Tuesday Target Audio Overview. Stay sharp out there.